Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to the show, John.
Jim, it's good to be back.
Arizona Silver recently reported final results for its Ramsey drill program in Arizona. The market was unimpressed. Where do we stand with the Ramsey project as a Discovery Watch company?
What is very clear at this point is that the Ramsey North hypothesis, about which I got quite excited about a month and a half ago, is a complete and utter failure, a bust. On July 4th, they published the results for holes number 3 through 7. Number 3 and 5 were from the Ramsey North target area. And just to remind our listeners, the idea was that a northeast-southwest fault had downdropped and offset to the northeasterly direction the Ramsey vein system, which had yielded 10 ounce per ton silver during the days when it was mined as an underground vein system. The target at Ramsey North was a bulk tonnage scenario, open pitable, hoping for 2 to 4 ounce per ton silver, something in the order of 40 to 60 million tons. The first round of drilling came out on May 30th, and it was very disappointing for holes 1 to 2. There was some hope that on a couple hundred meters to the south on line 2 that the material they intersected there could have a better silver grade, but it was just as bad. No significant silver values was all that they put in the column next to those holes 3 to 5. Now, this is pretty disappointing. It means that while the system appears to be present there, it was not infused with any silver-pregnant solutions. So the other news that they put out was for holes 6 and 7. They had stepped back across the fault into what they call the Ramsey South area where the original mine was, and they had drilled 2 holes down dip to see if they could intersect a high-grade silver in the down dip extension of the Ramsey vein system itself. Now, we got a combination of good and bad news out of this. They reported intervals of 44 meters of 62 gram per ton silver, which is about 2 ounce silver, and in hole 6, and in hole 7 they got 53 meters of 37 gram silver, which is about 1 1/4 ounce per ton silver. Now, this range, 1 to 2 ounce silver, is not interesting even from a open pitable scenario. You need at least 3 to 4 ounce silver to make a mine, open pit mine. But what was the good news in this development was this is a sort of a 60-degree dipping vein system, and they were expecting to hit it much deeper, and they were hoping to find a high grade, 1 to 2 meters of 1,000 gram per ton silver. In other words, 10 to 20 ounce per ton, similar to what the old timers mined. Well, they did not get any high grade intervals in there at the detachment fault contact where the high grade vein is nestled. There really was no high grade vein. However, the mineralization, this 1 to 2 ounce mineralization, sits above this detachment fault where it is supposed to be. The good news is that the angle actually flattens. So we're only dealing with a 65 to 150 meter deep system, rather than something plunging towards the center of the earth, where if you're going to get 3 to 4 ounce per ton silver, you're not going to be able to mine it because that's too low grade for underground mining, and it's too deep for open pit mining. So they are now looking at an area of 700 by 250 meters heading east from the old Ramsey vein system. It's an area of altered rhyolite volcanics. It's never been drilled because you can't find any trace of mineralization at the surface. There is an old small vein called a creosote vein on which they chased it down about 45 meters. It's only about a meter wide. It also appears to have been high-grade silver, but at around the 45-meter depth, it pinches down to half-meter, so it's got somewhat different mineralogy, and it's sitting there by itself, so nobody ever bothered really chasing it. However, with the possibility that this system now flattens and has this low-grade mineralization, 40 to 60 meter thick package, and at the depth that it is, there is the possibility of moving the old Ramsey North hypothesis into the Ramsey South area. And it's interesting that when Gwen Preston and I did the site visit in May, we did walk in this area, and at the time, management was intrigued by the alteration they were seeing in the rocks. But when I asked, when are you going to go drilling in this area? And the answer was, not in the foreseeable future. Well, with the Ramsey North target a complete failure, and this surprise with the flattening of the Ramsey vein system, they are now going to take a fresh look. They are not drilling right now. It is too hot in this part of Arizona for safe drilling conditions. They will resume in September, and they will start probing in the Ramsey South target area to see if they can get better than 1 to 2 ounce per ton. If this whole large area to the east is indeed part of a big mineralizing system, there is a good chance that the story that had us excited back in May could be back on track, just with a slightly different location. But the other interesting thing that they dropped in this news release was they provided more information on the Western Deep IP anomaly. And as you may recall, they did 2 IP survey lines in the Ramsey North target area to see what sort of sulfide behavior there was at depth. And the crew at the time, as it was pushing it to the western limit, noticed that the intensity of the response was increasing, so they disobeyed their instructions and pushed it westward well beyond the magnetic anomaly that constituted the Ramsey North target. And so they now have had on lines 3 and 2 a very intense sulfide anomaly that begins at a depth of about 200-300 meters, which is probably too deep to be of interest as an open pit scenario. And given the nature of the intensity, it is probably just pyrite. However, the possibility exists that this is the pyrite shell of a possibly copper-enriched porphyry system. And so this is now a very significant target. It's under about 100 meters of alluvium, and in that area, nobody would ever have done any geophysical survey in this area unless they had this hypothesis of the Ramsey North target and did the work to firm that up as a drill target. And as Mother Nature would have it, that target is a bust, but in the process may have revealed an even bigger prize. And what was in that news release on July 4th is that the line 1, which they had originally pushed eastwards to cover the Ramsey South area just to see how the sulfides behave over there, they have pushed that westwards, and now we have this deep sulfide anomaly existing in a large 500 meter by 500 meter area, and it is shallower in this area. So come September, they will be drilling a scout hole where the sulfides start at only a depth of about 100 meters, and this will, hopefully confirm or establish the style of sulfides that are present. With luck, they may even have some smoke for metals that we're after, such as copper, and they will do downhole geophysics in an effort to understand how the sulfide bodies work, because they'll be chasing a lower intensity sulfide system that is enriched with the target metals that you would mine.
We'll have more with John Kaiser right after the break.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
Welcome back. We're chatting with John Kaiser. John, Eskay Mining Corp is a Discovery Watch junior you also recommended as a bottom fish buy earlier this year based on hopes that this summer Eskay Creek 2 would be found. Has drilling started?
Drilling was supposed to start in mid-June, but because of the severe winter we had this year, the melt was late, and the company has only just now announced that drilling has started. They put out a news release on July 4th that Silver Standard will be drilling 4 holes. It has started the first one. They are about 900 to 1,000 meters deep and will be drilled at an angle to intersect the sort of subvertical stratigraphy beneath the Coulter Creek thrust fault. Now that's a whole bunch of geological mumbo-jumbo. In simpler terms, what they are doing is trying to find the iceberg from which the Lulu tip detached. Back in 1990, when the Eskay Creek discovery frenzy was sending stocks in this area to the moon, drilling had intersected 14.3 meters of 14.5 gram gold, which is about a half ounce, and about 1,060 gram per ton silver, which is about 30 ounce silver. That's $1,000 rock at today's gold and silver prices. But at the time when they did the follow-up drilling, they could not find any size to the zone. It just seemed to disappear. And several groups have tackled the Lulu zone on the SIB project several times in the subsequent 20 years. And what they learned was that the Lulu is a tip detached from its original source. The stratigraphy that hosts the Eskay Creek deposit has been tilted on its side, and the Lulu zone would have been at the upper part of it, but a fault, what they call a thrust fault, and this one's named the Coulter Creek, came along and sort of detached the chunk of rock, including with the Lulu zone, and pushed it westwards, probably about 500 meters. But as a result, the original stratigraphy is obscured under about 300 to 500 meters of rocks from the east that aren't going to host anything. And the way to look at this is imagine a black forest cake where it has one cherry layer, and this black forest cake has been put on its side, and then somebody has put some very boring coffee cake on top of this, and you're supposed to be with your knife spearing through this to try and find this vertical layer of cherry jam. And this is very difficult to do. And what Silver Standard has decided to do, and this is going to be a $12 million program that they will take several years to execute, is they will start in the footwall rocks to the west, where they are the Bowser Basin rocks, absolutely worthless rocks that do not host anything in this Golden Triangle area of northwestern British Columbia. And they will drill this first set of holes eastwards within the footwall underneath the detachment fault in the hope of intersecting that cherry layer on a near perpendicular basis. And what they're really doing is they're going on a mapping program to figure out how does the stratigraphy behave. And what they are looking for is smoke, mineralization showing we're into the mudstones that host this gold, silver, and zinc, copper mineralization. And once they have that, then they can do tighter drilling. The first is fairly wide-spaced drilling, stepping out In subsequent years, they'll step to the east and drill westwards to the south and then also to the north. And the goal is to demonstrate that something similar to the Eskay Creek deposit is present on the SIB ground.
What is the size of the prize?
The Eskay Creek deposit is phenomenal. It had a strike of only 1,500 meters and consisted of 2.5 million tons of 43-gram gold and 2,200 gram silver with zinc and copper credits. This is a volcanogenic massive sulfide system, which apparently had a later epithermal overprint that enriched it with the gold and silver. This ore was so rich that they shipped direct ore to the smelter, and they used the zinc and copper credits to basically pay for the transportation and the smelting costs. Now, there's plenty of room on the SIB property to host several Eskay Creek scale zones. If an Eskay Creek deposit equivalent were found and mined today, it would be worth about 2.8 billion Canadian on a net present value basis using an 8% discount rate. For Eskay Mining Corp., which has about 118 million shares fully diluted and will net 20% after Silver Standard vests for its 60%, that would represent a price target of nearly $5 a share. Now, that may not seem very much, but that is the way the math works when you have a relatively small net interest and, 100 million plus shares fully diluted. But the interesting thing about this situation here is that if Silver Standard finds evidence of another Eskay Creek system within the SIB claims, this will backstop the idea that because these VMS systems occur in clusters, the 100% owned quarry ground that Eskay Mining owns to the south and has a similar stratigraphy, all of a sudden it becomes prospective again. So the company would get a bump for the 100% portion and probably be able to raise money to explore the southern part where previous operators had conducted work, but that didn't really deliver anything but provided tantalizing evidence that there's something going on there. So the size of the prize is substantial, a $2 to $3 billion system. This is a high-stakes project. Silver Standard would love to get hold of another rich deposit like this. And the biggest challenge for Silver Standard this year will be technical challenges related to drilling these long, angled holes within the footwall. This is what I'm going to be watching for over the next month to see if they can pull this off, because once they have got that working, then they will just systematically map this blind stratigraphy to set the stage for what hopefully will eventually be a kill shot that delivers a major, major discovery.
Highway 50 is another Discovery Watch Junior hoping to repeat history, in this case finding Sullivan 2 at its Monroe project. Where does this project stand?
Highway 50 completed 3 holes since 2016, deepening of 1 this year, and a completion of hole number 3. And they have just started work on a 4th hole at the Monroe project where they can earn 50% by spending $3 million. Now, the work so far has focused on what they call a horst block within the basin sediments that host the Sullivan deposit, which was about 150 million tons of rich zinc, lead, silver, and other metals. And the big thing in southern British Columbia has been the hunt to find another one of these giant SEDEX systems. And the interesting thing about the original setting where these SEDEX deposits form, where they're basically smoker systems that spew their enriched fluids into the ocean floor, and then they just sort of drift down with the tide and settle down and form these big pancakes. But the gateways for this to happen are a Graben-Horst system that was developed prior to the sort of the hot spring events that put the metal-enriched brines into the ocean environment. And so they realized that they were into this horst, and the results that they reported about a month and a half ago was that they had intersected lead, zinc mineralization, but the alteration associated with it, called albite, is in these types of system post-mineral. So they realized, okay, we're close to something, but we have some smoke, but we do not have the cigar. So the strategy now is to step to the west, north, or east, where the graben would be, so the original downdrop portion, and go there to try and find the original massive sulfide mineralization that would be similar to the Sullivan deposit. And in a sense, they are guessing. They're starting off to the west, and it's going to be sort of drill the hole, reassess. Do we continue in this area? Do we move north? Do we hop over to the east? It's basically a gradual process of elimination. Now, if they find something that is a third the size of the original Sullivan deposit, so say something like maybe 50, 60 million tons, at today's metal prices and costs, that would be worth Canadian $3.2 billion. So Highway 50 has only 40 million shares fully diluted and has a 50% net interest. So if you do the math on that, you're looking at ultimately a $40 price target if there is no additional substantial dilution to fund ongoing work. So this is again a very high stake project, exploration project, and the biggest headache that they have right now is that British Columbia has a major forest fire caution, and their concern is that they may end up being forced to shut down drilling this summer because of forest fire hazard.
We'll have closing thoughts from John Kaiser right after this.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. John, do you have any new Discovery Watch candidates?
Well, the one I would like to introduce is a discovery that has caused me lots and lots of grief in the past few years, and that is the Chidliak project of Paragon Diamonds. It's on Baffin Island. It was initially a BHP Paragon joint venture based on regional sampling. It resulted in discovery of several small but high grade and very good quality diamond pipes. BHP eventually decided it wanted to have nothing to do with diamonds. Paragon ended up getting back 100% of the project. But in the past few years, the company seems to have been orphaned, even though Eric Friedland and Robert Friedland are the major shareholders in this company. They have done two very dilutionary rights offerings at deep discounts to the market, and the market never recovered to the price that it was before the rights offering was announced. And the first time it was from 40 cents down to 20 cents, and then the second time it was from 20 cents down to 10 cents. And last year they completed a PEA for the Chidliak project, which looked pretty good, strong diamond values. But the company seemed to just lose its momentum, and it fizzled back. It was about 20 cents last year. In November, I ended up putting out a recommendation where I gave up on Paragon Diamonds as a spec value hunter pick. I suggested to my readers that they swap out of Paragon Diamonds and swap into Scandium International, and that has turned out to be a smart move, because Scandium International has been as high as 45-50 cents, currently at 30 cents. Mining lease, everything in place, waiting for the special meeting on August 24th, where the Evansons will end up with a major stake in the company. And Paragon Diamonds I've ignored, because it just seemed that the Friedlands didn't care about the company and that there would be another dilutionary financing. And in fact, today, the company did indeed announce another dilutionary financing. There will be $10.3 million or so raised at 10 cents. So the stock, of course, has dropped from 16 cents down to 12 cents. And my immediate reaction was, okay, here we go again, the dilution death treadmill that I had feared. It's become a reality. But there is an interesting twist that is giving me reason to take a fresh look at Paragon Diamonds and not just dismiss it as this company that's gradually going to fade away and be privatized by the Friedlands. In this case, both the Friedlands have agreed to exercise all their rights, which is about just under 50% of the issued shares. So there'll be about $5 million coming from them by simply exercising their rights. But another entity, and this is a Resource Capital Investment group, the old Exploration Capital Partners that Rick Rule was involved with, that got vended into Sprott when his firm Global, San Diego-based Global, merged with Sprott. It has agreed to guarantee 55 million shares to be exercised. Now, this is interesting because Rick Rule does not normally like to back anything where there is not a reasonable expectation that there will be a promotion going on. And in my view, the Chidliak project has been substantially undervalued by the market. So this positioning event, which can only be messed up if everybody actually exercises their rights and puts in another 10 cent into the stock, Rick Rule will end up with a substantial stake in what is a company that should be trading at significantly higher price than it currently is. So the drawback, the sort of paradox here is that if all the existing shareholders exercise their rights, well, then there's not going to be anybody making any effort to promote the company. On the other hand, if everybody stands back and lets Rick Rule honor his standby guarantee, then we would see his outfit with a major position and a rationale to support the company going forward. So Chidliak is back on my radar, and I think this time we will finally see justice done to what has really been the best diamond discovery story in the past 6-7 years.
John, thanks for the update.
You're welcome, Jim.
We've been speaking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.